The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Welcome, everybody. It's not Basil Chapman. It's Tommy O'Brien. Basil will be here in a moment. He's in the saddle. He's getting set up. He's getting ready. He's getting all his charts ready, and I'm going to fill in for a few minutes while he jumps in that chair. Checking in on the markets, we got the Dow Jones up 115 points, trading at 25,578. S&P's positive by 8, trading at 2748, and the Nasdaq positive by 35 points, trading at 7364. Got some action in commodities today. We got oil trading off almost $2, $1.60 to the downside, trading at 61.48. Been a while since we've seen a 61 handle on that oil contract. Gold contract pulling back as well, off about $4 at 1228.60. Dollar index basically flat, trading at 96.080, and notes and bonds marginally lower in price, marginally higher in yield. 10-year note off 3 ticks at 118.01, 30-year bond off 7 ticks at 137.11. Checking in on some of the futures markets, jumping over to the Nadex platform. The interesting markets out there, crude and gold, crude especially. So jumping into one of the headlines here, you have oil prices tumbling 2%, having to do with President Trump granting Iran sanctions and waivers. So you have sanctions on Iran's fuel exports reintroduced Monday, and to dig into some of what they're talking about, you have WTI, no matter what you're talking about, but WTI dropping more than 2%. They have 61.77 in this article. We're below that level right now. But you had the sanctions restored on Monday. Waivers were talked about, some of those coming into fruition today. And you have oil with more supply, $61 on that price tag. Pretty remarkable. In terms of other news across the market, Symantec getting quite a jump, 15% to the upside after reportedly being approached for an acquisition by Thomas Bravo. And to jump over to Symantec, quite a number, SYMC. There's your acceleration, pulling back a bit from the highs. Symantec up about 13% now, spiked to 23.57, currently trading at 22.63. This is on a 5-minute chart to put a little bit more context. On a yearly, quite a difference when you look at it on a yearly. Pretty intense. Going back to May, you had Symantec up at $28, trading at $18. No wonder you have a company maybe potentially thinking about coming in with an acquisition when you just went from $28 down to $18, more than about a 35 to 40% haircut. Quite a number on that stock. In terms of what else is happening across the market, Amazon, lots of talk about their second headquarters, where it will be. Well, it turns out, reportedly, they're going to split it. They're going to split the difference between Crystal City, Virginia, and then potentially in Long Island, possibly Queens. So there were going to be 50,000 employees. Speculation that could be split in half with 25,000 workers in each area. Of course, their main headquarters in Seattle right now, branching out to an East Coast presence and branching out to 2 locations potentially, and that'll be quite a boost to the economy no matter where they end up, that's for sure. CVS in the news as well. We'll close that ad. There we go. CVS to test stores with added health services early next year after their Aetna deal closes. So the healthcare landscape changing dramatically. Amazon in that mix as well, as we start to see health services being a factor in CVS with their acquisition of Aetna. To see how those shares are trading this morning, CVS up about 4.4% today. That's a daily. To dig down a little bit closer, there's your acceleration. So CVS up 3.26 or almost 5% today, trading at 76.96. The healthcare landscape changing dramatically right in front of our eyes. Checking in on the VIX, of course, election day. I'm going to be watching some of the futures markets tonight. They should be interesting, especially as some of the results end up coming in. When we decide who controls the House, who controls the Senate, you might see a little bit of an acceleration. The VIX just waiting for that news. And, of course, we have the Fed coming as well on Thursday with their decision. So a lot of news. VIX trading at 2015. Election day. Get out there and vote if you haven't already, folks. You got plenty of time. Make it happen. Do your civic duty. And with that, I believe we have Basil on the line. Basil, good morning. Good afternoon.
Good morning. How are you?
I'm doing well. How about yourself?
I was a little rushed, but now I'm relaxed, sitting in the chair.
Perfect.
Looking forward to the story before us.
Perfect. Well, we got it all warmed up for you, Basil. I'm going to throw the microphone over to you. I'm going to let you take the saddle, take things from here, man. Good to say hello to you as always.
Yes,
good to keep the seat warm. And I'll let you take over from here, man.
Thank you for holding the fort, as
My
always.
pleasure, as always. Okay, thanks, Basil. Take care.
Okay. Hi, folks. Basil Chapman, Tiger Technicians Hour. We're on the way. The Dow's up 119 at 25,580. What's really important, it's when you consider that there's a midterm election coming up, when you consider that there were other background stories that could have been very, very probably negative, to the extent that certain sectors, as the NASDAQ yesterday showed that it was much weaker than the Dow. This is very impressive action. Basically, what the market is saying is, you know what, we've done our assessment, and whatever happens last night, we think that it is going to be an overall positive. That's kind of what the market's saying. Of course, in, what is it, 12 noon Eastern time, in another 8 hours, 9 hours, maybe there's a different story. But this is very good. And what I was saying, and what I said both to here and to subscribers, and let me see if I can get that right here. I believe this is the chart. Is this the chart? I hope it is. Nope, that's not the chart. Well, this is one chart. You see how this Dow daily chart that goes back to 2015 to the low of 2015 and 16 in the Dow, you'll see that the brown is the S&P and that the blue is the Dow. Look how it's held beautifully, this uptrend line. And look how each time that the stochastic went underneath 20%, there was a very nice upward move. And how long it lasted was dependent on other things, but it held the support very nicely. So now let me go through. And one of the reasons why I really rushed to get back here, because I wanted to do the show, even though it was not that easy to get here, back into the office. I wanted to mention that there are a couple of things that are going on that we have to consider. The market is the boss. The market really is telling us, if you dig down deep enough, it's saying, this is what we think. This is the comfortability factor that we have. This is what we're uncomfortable with. And what it's saying right now with the MACD in the day, look, the MACD crossed positive. The stochastic is rallying. It was running okay up until yesterday. Now it's up in the 73% area. That's good. And what it's saying is that to get back to the 24,122 level of just a week and a half ago, there's just going to be a lot of bad news. But to be able to break to the upside, we're going to do that step by step as we go through it today. Let me just run the numbers, and then we've got our callers waiting online. So the Dow is up 125 right now. Very impressive action for the day of the midterms. Maybe there's going to be a rug pull tonight, but you have to say that you've got moving average support levels. That's what I said to subscribers. We actually are short, but we've got 1/3 of a position. We're prepared to take off under other circumstances, because I still think there's going to be an arch formation, and how we test the earthquake and the aftershock, that's going to be the issue. The S&P is up 10, a little bit about in parallel with the Dow. It's at 2748. Hasn't made the leg B yet. I'll be right back straight after these.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion.
While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's call in a moment. I just want to finish the numbers and then we're all set, because it's very important that we get to look at all aspects of the market. As I say, the 200-period moving average is a resistance level now at about 27.50. And we're at 27.48 on the S&P cash. The QQQ, let me do this. QQQ is up 1.04. So the QQs are catching up finally. They're up 0.62%. Dow's up 0.44. S&P's up 38.38%. Whoops. And what we're looking at is in the QQs, just make it easy. Any move at a 170.04, any move into the 172.75 area tomorrow morning this time, if that's the case, is very positive. Any slide below 169, 168.70 would not be so good. Let's do the IWM, and then we're going to go to our callers. IWM is lagging a little bit. It's only up 0.22%. It was, the weekly chart on the IWM is really lagging a lot. Let's go to our first caller. We've got Scott in Safety Harbor. Hi, Scott. How are you?
Boy, long time no talk, Basil. How you been?
Very well. How you been?
Just needed a break. You know, I go at it pretty intensely, and
right.
I stumbled across a couple of weeks ago. Someone mentioned Ford was way down. I was trying to keep my mind off everything, but I couldn't help look at it. It was 890, then it dropped to 885, and I went in large. And,
right.
I'm so blessed.
Wait,
Basil.
Scott?
Scott, did you? Scott, I'm like, you gotta be kidding me.
Scott,
so
did you?
My question
hold on, Scott. Did you go in
David
just
Copperfield
recently?
Of the stock market? Do you see this as a little sign of strength in Ford?
Yes, I'm looking at Ford. Even General Motors did very well. Ford, Chrysler didn't do as well. But what I wanted to ask you is, are you in Ford after the decline to 820 and now on the way up, or did you sit through the decline?
No, Ford. I got in it at 880 a couple of weeks ago, and now it's over 9. So I'm doing well, and I want to go in even more. Okay.
So what I'm looking at, folks, as far as Ford is concerned, there was just bad news, and it went from the 10 of about 980 right down to under 820. Now it's come back in a V-shaped pattern. It's sort of stalled in the 960 area. It's trading at 951 right now. The weekly chart, this is the best I've seen the weekly chart in a long time. I do not like these spirals to the upside that stall for more than 3 bars. In this case, it would be the weekly. This is the second bar after the doji candle gap up of last week. So I'm looking at Ford, and I think, see, this is so important. The reason why I want you to take your call right away before I finish some of the other sectors in my overview is that it's going to be really important. If I look at Ford and I look at this monthly chart, F is the symbol for Ford. It's trading at 952. It's down a penny. Now, when I go to my major long-term chart, Ford had been down. I don't know if anyone ever remembers, but we had a wonderful host here at TFNN. And he was recommending Ford when it was, I think, under $1. It was an incredible, beautiful call. And it ran up to 1897. And then it kind of stalled and made a U-shaped pattern. 1812, it retested at a peak D back in, I think it was, probably January of 2014. And then it just made a steady move down. Now I've got in a Chapman wave left side, right side price time match. 882 was the low that I was talking about on the show just recently. Oh, so 869 was the low that was made back in August of 2012. And I made what I called a measured move to the right side in the Chapman wave from the 1044 low that was made on August of 2015. 2 years later, so 12 to the up. And now what we've got is it's 1 month late, but it is held. It went to $8.17. So it went below the 869 low that was made back in 2012, but it's now up at 952. So to me, that was a sign to say, okay, we've had a test. There should be probably one more test in the monthly chart. And that's going to be key because it has to hold $8 no matter what the circumstances are. So I'm just giving you the big picture. I know that you're shorter term trading, but I did want to show what I'd been looking at and the move, the very sharp move in 1 week from 820 up to the 950, 960 area. That is really important that it was able to do that, but it's going to be even more important to hold it. So this is what I'm going to say to you, because you sat through the decline and now it's coming back to where you bought it and now you're making money. I'm going to suggest that you should at least think of having some kind of a stop on a part of your position, Scott, if it goes under 826, if it closes under 826. And there's only one reason why. The weekly chart is just crossing positive in the MACD. The stochastic is good, but this kind of accelerated news-related move to the upside very often has to do some testing. It doesn't have to go back to the low of 820, but it might have to do a little testing at 920. So I'm just saying to you, if you want to add to it, let's see what the market does tonight into tomorrow. If it takes whatever the news, political news is, with absolute alacrity, if it just treats it as if ho-hum, nothing to see here, folks, market is, the wages are increasing, the joblessness number is at record levels. This is very bullish, rather than looking at what I call the rotational slowness in different sectors. Then what we're going to be looking at is that Ford should become a participant on the next big move up, as well as some of the other laggers that have been really very poor for a long time, and in a sense are interest rate related, but they're also to do with earnings and wages and salaries, etc. If people are making money, they're going to be buying cars, and I think Ford should benefit. So I'm saying to you, you wanted to go in a little deeper. It's at 953. I don't want to spoil your methodology. I don't want to change it at all. I'm just saying I would rather give it a little bit of time. I know these sideways moves, they can last a long time, be very frustrating. I would prefer to see you add to the position with a fairly tight stop around about 938 to 932. And that's kind of where I would say that's the best risk reward, because if there's a rectangle formation that's unfolding, it should go from the 930s back to the 962, 63, come back to the 950s, and it should just wiggle around here for a little bit longer before it can build strength to go to the upside. I don't know if that helps you, but that's the way I'm looking at it. And it is on my watch list because I too am looking at it and saying, hey, this is good action after being just horrible for a very long time.
Well, Basil, you're a wise man as usual. I'm going to go with that, and I will talk to you next week. I hope everybody in Florida gets out and votes, even if it's for someone that I don't like.
Okay, yeah, I agree. So I meant to mention one other thing. What I would do is that if tomorrow afternoon at 3 o'clock, if whatever the market's doing, let's just say it's up 150 points, right? If the market is up and Ford is participating and it's at 963, then I would say to you, now you can add another position because it's acting very well. I'm just saying, I want to get through the next couple of days. Hope that helps. Thank you for calling, Scott.
Thank
we'll
you
be
very
right
much.
back.
Good to hear your voice. Bye-bye.
Thank you. The Dow is up 106. We'll be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So General Motors is also acting very well. It's up 14 cents. It's come off the 30.60, I think it is, low that was made back around October the 29th, maybe 7th, and it's hit the 200-period moving average of 37.03. I like this, and the more work I did, and one of the reasons what I said to my subscribers to my opening call is that, yes, we've taken real nice profits on our short-term trade. We could try to get back into that. We missed getting back into it. It's a pity because we got in real nicely, but that's the way it is. It's on my list now. It means that in the next pullback, we'll probably get back in. We did get a new position today, and that's up quite nicely percent-wise. And we've got some cash. And I said to subscribers, I don't mind. I don't want to see a huge whopper of a gap up tomorrow. it's going to be a little difficult to get positions. But if it does do that, there's a perspective that I have on the market that said that the technicals were actually improving going into yesterday's close. I don't want to deny that. I don't want to have any preconception that we've just got to go down and test 23,300 or even the 24,600 area. I want to see what's going on. Why? Because if you have cash, it gives you the sense that you can put the money to work, because if there is, let's call it, you remember I like to talk about the internal low and the residual low. If the 29th was an internal low, which now there's a lot more evidence to say that it probably was, then the residual low, you remember it's like the dreaded H pattern. It's like the inverted Y, which is the drop bucket or the double top pattern, where you've made the left side high. How you deal with the right side high in that cup formation is going to be very important. So it's the internal high and the residual high. We saw that the Dow made an internal high in January of 2018. It could have made a residual high in October. And how it deals now with this coming period is going to be very important. I still think there's quite a lot of repair work that certain stocks have to make. But wait a minute, look at gold. Gold is trading right now down 4. Still within this pattern in the weekly chart that says the MACD rallied quite strongly. Stochastic rallied very strongly from the single digits, or let's call it the teens, into the 76% area, and yet the price has gone from 1167 to about 1240 in a very long period of time. It's just saying right now, gold is struggling to maintain its upward posture. Whereas the dollar, I don't know, I haven't looked at it because I just got back. The dollar is holding quite nicely, but up in the higher ranges. It isn't, it's got the cup formation. I'm wary of that. Yep, we're in at 90.07. It's at 96.31, having hit 97.19 just on the 31st of October. I'm looking at this and I'm saying, you know, the dollar can take a little longer to digest these gains. We don't know. The result tonight might mean that the dollar is suddenly trading at 97.30. Oh, the dollar's trading at 95.50 within 2 days. And that's going to impact gold. So that's why it's very important to be looking at everything that you can right now and not necessarily making decisions, because, first of all, I didn't want to be wrong. 300 points in the Dow from this level, if the market goes either up or down. I'd rather have the time to be thinking of it. We've got our positions. There's no rush. But what's really important is that if you look at the TLT, it's saying that at this particular point, with 3.5 hours to go before the close, and then a whole evening to go before the opening tomorrow, regardless of what the futures do, what happens tomorrow in the TNX, which is the 10-year, which is the 10-year yield, there it is. It has not made a new leg up in the weekly as the 30-year has to go to a leg D. This needs to go to 32.49, and it's at 32.16 right now. And then it goes to a leg D in the weekly, and it extends leg D in the monthly to the point where you can say, oh my goodness, the 33.22 level is going to be really important, because that's the magnet of the 200-period moving average in the monthly chart that it broke down from years ago. It's the first time it's even got close, and that makes it a magnet. So it is so important how the rest of the, I would even say the rest of the weekend falls, but of course we're looking at tomorrow at this time. The IYT, nice candle, but hasn't gone to leg B yet. So this is using a lot of energy to the upside. Will there be an arch formation to do some retesting? And then we get going so that in 2018, we actually start on our way towards all-time highs? Or is this going to be a longer period, maybe using time more than price? And I think the IYT is a clue. I think that the IYC, I haven't updated this for a while, but this is the iShares US Consumer Services, and that has Amazon, I believe, yep, has made a peak E in the monthly chart. And we're looking at, and the weekly chart of peak E at 213.17. It ran down to 186. It's trading up at 199 right now. Also, right on the cusp of either breaking to the upside for a large arch formation or breaking down for a smaller arch formation. So or you could say it was almost like a V-shaped formation if it's trading at 202.50 by Friday. That'll be very good action in the transports. Question I had about the XRT. Yep, I did want to look at that. It's very important. XRT right now. That has gone to a leg A and then a leg B, and now it's in a leg C. Peak A, peak B, peak C in a very quick period of time, and this is the retail, and this is going to be very important. I prefer to look at the RTH for some reason. I just have more affinity with that. That's not as strong. Market Vectors Retail ETF trading at 105.46, up 38 cents, but it needs to clear 106.70 to really say, aha, now we've got at least a chance of a leg D to the upside. Boeing, let's do our usual Boeing look. It's up a little bit. It's up a lot. It's up 5.86. It's up 1.62%. It needs to get to 371.55 to start leg B in the daily, and then monthly chart. That fulcrum is going to be so important. Do we hang around here with no retest of the 350s, or do we hang around here just a very brief period and then go straight to 375, which would be, I would say that's very positive for Boeing if it can do that by Friday. Question I had about, where did it go? XLI, there it comes. XLI is in a leg B, a gray leg B. MACD's turned up. The stochastics, it's just okay at 48%. That weekly chart says the S&P Industrial ETF, the XLI, trading at 72.06, up 70 cents. It says it's probably going to need a little more time and a little more price, and then it will start to test the 73.90, 74.30s in the moving averages, key moving averages in the weekly. But it is a good bounce, but I would just treat it as a bounce. Next question I had was in the den was, would I look at CCJ? I think that's a copper company. CCJ is Cameco. Cool. Whoa, what a nice move up. 12.52 up 42 cents. That up A, B, C. Oh, I'm going to do a little work on this during the break. Basil Chapman, Tiger Technicians Hour, Dow's up 133. Very impressive for the midterm election. It's saying that the market is so far very comfortable with what it thinks is going to be the outcome of the election. S&P's up 30.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. CCJ. Cameco Corporation trading at 12.54, 44 cents. Big move. Had a big move yesterday. This is really important because the weekly chart is the most informative as I see it right now. The weekly chart made a low back in 2018 in October, around the week of the 27th at 768. It ran up to a peak C in the Chapman wave, pulls back, has an inside A, B, C, then together it has an overlapping wave that goes to D, E. And if you know the rules of the Chapman wave overlapping wave, it says after the D, be careful, you're bound to come back and retest the C area, which it did. And then it runs up to an F, pulls back, makes a double top, goes all the way down to this trend line support. And now this is in a brand new peak A, pull back at the 200, exactly on the 200 period moving average. And then it breaks today above the 200 period moving average. So the 1218 level to the 1187 area, my suspicion is really strong support. The resistance is at 13. The uptrend resistance line in the up channel, gray, let's call this green because if it breaks above, it's positive. The inside track repellent zone is right here. And you can see it's just hitting it and starting to be repelled. This is what I think, and I'm going to draw it in. Let's see if I'm correct. I draw it in more as an oval than a rectangle. And I'm going to say in this particular area right here for the next, I'd say a couple of weeks, there could be a trading band that's made. And there we go, right there. That's it. So this is the area that says chop, 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 very good action, but it should consolidate around the 200 period moving average for a little bit longer, and then treat the 200 period moving average of 12.18 to 12 as a propellant zone rather than a magnet and a repellent zone. And so I'm looking at this leg D in the monthly chart. That's very good action so far. This is very bullish, but it might take a little time before it actually starts to break out into the 1350s. That's how I'm looking at it right now. If by Thursday afternoon it's trading at 1320, that's really good because it's pushing away from the magnet of the 200 period moving average. MACD is okay in the weekly, stochastic's not that great. Monthly chart is actually a little bit better, and the daily is showing some singular strength. In other words, this big leg A, it's got the strength, but I don't trust a single leg A like this. It needs to have some backing and filling to show it's got support. Yes, I do like it. So that was that. Next question I had was, okay. So what about something like the SMHs? Well, we're out the SMHs completely now, waiting to see what to do. And I think there's time because this is going to be the big clue. If the SMHs, which since March at 114.55 have tumbled to 86.95 and now are just only at 96.66. It's saying to me there's a real good chance they're going to make that H pattern. And if they pull back, it's saying that the commoditization of so many areas of the industrial area based on semiconductors, and with them being weak, before orders can come back again, I suspect that there's even more chop, chop, chop to the side, but it could be that we set up, that we're setting up some kind of a trading band between 101, let's call it 102, and 89 for now in the shorter term. So yes, you can do trading to treat it as shorter term trading in the SMHs if you're going long. And if you're going to go short, have a little patience, because I think that you're going to have a good retest of the 90 to the 87 area at some point. Now, the Dow's up 153. So let's look at the VIX index. The VIX index is only down a little bit, down 0.11, down 0.55%, but at 19.85. Yes, it's gone back to the teens, but it should really be at 17.80. It should be at a low, and it's not. It's just stuck near the 200. The 9 and the 14 period moving averages are both at about 20, up within a point, and that says, wait a minute, what's going on here? So I think that there's insurance being bought. So this is my outlook. This is really what I wanted to be here for. I love the fact. Ooh, I'm going to try to see if it's this particular index right here. Nah, it's not. No, that's not. What is that? Crude oil? Yeah, it's not. Oh, I didn't do crude oil. Sorry. Crude oil right now is, where did it go? Crude oil is even lower. It's at $1.43 lower. It's at 61.67. This is really bear market material, which means I have to look at the XAL. You know, it's so fascinating. Here you have a president. I've been around. I remember the Nixon years. I've been around for, when you talk about hate, if ever there was a president that was hated, that was Richard Nixon, just on many levels. And the media, if you think this is bad, if you were a Republican during that particular period of time, I can't even imagine what Republicans must have been thinking. Every hour of every day, there was something horrible said about Nixon. And when you go back and you look at it, yeah, he was a lousy kind of a guy. In many ways, he just was not a great personality. He started off the whole China thing. He did that, I think, because he wanted to get away from all the bad news here in the United States. He wanted to get out of town, and he thought it was an appropriate time. But it is fascinating. It depends on which side you're on. I can imagine what Democrats were thinking during the Clinton impeachment period. So yes, we've seen this before, but the way I've never seen so many people feel free to say anything that they want about a president, an American president, as now. I've just never seen that. And the license that they have is unusual historically. Let's just put it that way. How does that resolve? Now, I think that as long as Trump is president, I don't think it's actually going to resolve. I remember all the things that were said about Reagan. I remember all the things that were said about Ford. It just seems like it's a theme. But I also do remember things that have been said about different Democrat presidents. But the level of animosity in the press, to my eye, and I'm talking about this because I'm really wanting to focus on the market, and to do that, I have to look at the peripherals. I don't think I've seen this amount of these kind of attacks ever before. So, and right or wrong, it's not the point. I just don't think I've seen it. Now I have to go back and say, but wait a minute, the Dow is up 143 points. Surely the market has to be saying, yep, I'm talking about, remember Watergate was asked, I'm talking about that whole Watergate thing. the market is just saying, you know what, let me just go to the New York Stock Exchange and I get back and we'll do that.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So, of course, there's a ton that I could talk about. I just don't want to waste time right now. What we need to know are two things. One is, if the market tomorrow at this time, look, it's up 133 at 25,595. I don't care what the reason is, by Thursday, if the Dow is trading close to 25,900, 26,000, that is really good action, and we've made an internal low on October the 29th, and this should be a very large arch formation. It doesn't mean to say you've got to come back and test the left side low, but first you make the V, then you start moving to the right with slightly higher highs, but they are not as high. That gives you that curve. And then when we retest, that's going to be the big thing. So if the market says, whoa, big mistake, and all of a sudden we gap down, I don't care about a gap down in the morning, it's how we are tomorrow afternoon. If the market has gapped down 200 points, 300 points, and tomorrow afternoon is only down 60, that is incredible strength. That is really good. If whatever happens by Thursday, if the market is down at the 25,200 to 25,000 level, it says time and price. We'll choose time rather than price in the beginning. And if it starts to take out lows, then you've got price. Just treat it that way. And now, just quickly, I like the way that the XLF is acting. It's not that strong, but I like the way it started to act. Yes, there is a question that I got. Yes, there is a chance now that there are V-shaped formations with the MACD and stochastic working. That's really important, and that's what you have to go on. Be very, the stocks that you'll be wanting to get, if they are pulling back and they're in your range, you could start a position, as I've said earlier in the week. If there are positions that you're looking, you've been waiting for, if you want to get them, you can start a small position. Treat it as a starter position, so that if the market pulls back, it gives you breathing room. You don't have to panic. And if there's a big gap up tomorrow, there are still a lot of stocks that are just, look at this. Goldman Sachs is not doing anything right now, but it's had a fabulous move from the 208 low to the 232 area. This is good action. So we'll watch this closely. We'll deal with it tomorrow. Let's let this play out. This is very good action so far. It's saying that the market so far is ignoring things. Stay tuned for Steve, Dave, and Tom. Have a great day.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft